So, good morning, everyone. Welcome to TradingOwl. Let's have the market review for the weekend of 5th August. So, I hope all of you remember the trend of the markets last week to have a comparison of where we stand today. So, last week, Dow Jones was trending. In fact, it had just managed to cross the resistance line over here. And after the Fitch rating downgrades and all, it has come down. All time frames are sideways, though daily has just taken support of the EMA, but overall it has gone sideways again. Nasdaq is again at the support of the resistance line, which is now the support line. The longer time frames are still strong, so this is kind of retracing, giving a good entry again, but yeah, it will just probably consolidate a little before it can pick up the rally again. Nikkei is likewise like Nasdaq. All the higher time frames are quite strong, and the daily has just fallen along with the global cues and taking support at 40. So this is a good bottom. If you see, there are multiple bottoms over here. This has tested this zone couple of times. So Nikkei should take support over here. Germany, it made an all-time high and it has come down. This can be a breakout failure like we had seen sometime last year. So maybe we'll have to watch the Germany or broadly the European markets closely from here. The breakout is quite strong, but unfortunately it has not held on to it. INR again back into the big upside swing. It's trying to break down. It did not. It's trying to break out of the resistance line. That also just was for a day or two. It has not. So I think the sideways movement will continue before it gives a clear direction from here onwards. So broadly, if you see Indian markets, though we have seen a lot of action this week, but if you see Nifty has just ended up approximately 0.5% down. Bank Nifty 1.5%. Most of the other indices are more or less flat. IT, which was down about 3-4% last week, is clearly a gainer this week, 3.2%. However, saying that IT overall is still very sideways. PSU autos, which were doing very well, have kind of consolidated this week. A fall in it, but not deep. 1.3% is not much. Pharma has been doing well. Reality, which was up 5% last week, has given up the gains this week. The breakout in the sector as such is yet to be seen. What we were expecting, the reality will see a breakout this week, has not happened clearly. Overall, the market is quite flattish, I would say. It is not big, deep correction or a big retracement that, it feels like overall. So let's see where the indices are placed. So this is Nifty. Nifty, if you see this on the right side is the monthly chart. The monthly RSIs are still trending. Overall, there's no problem. Weekly has tested 8 EMA, 8 weeks average. It is also trending in momentum. The daily has been retracing and it kind of not really tested 40, but around 43, 44, and it is reversing from there. While the longer terms are in momentum, the short term is consolidating, and I think that's pretty fine for a bullish market. A bull market, retracements or corrections are part of the bull market. So it is quite going at par with that expectation. If you draw a trend line on Nifty from the recent lows, it had broken down and closed at the trend line, support support, and it has moved back up. So as of now, that one-day fall can be a false breakdown. The day we saw the maximum pain this week, actually, but it has come back up about that. Bank Nifty is excellent placed right now. Longer term charts are in momentum clearly. Weekly has taken support at 60. It had gone down yesterday for a bit, but it is back and closed weekly above 60 at 60.52. Daily has managed to close back above the 50-day EMA. Also look at the the daily RSI. The daily RSI tested 40 and is reversing from there. Thursday's close was at 40. Now, what is the importance of this RSI and why we give so much of importance? We had sent a message regarding this. A lot of you know who have attended our weekend sessions earlier. I'll take this up in detail post our market analysis. But overall, broadly speaking, Bank Nifty is very well placed and risk reward from here is excellent. If anything has to go wrong, the stop losses can be very closely triggered and the downside risk is minimal. So Indian market witnessed a gap down opening post a Fitch rating downgrade of the US. Now coming to the FII sell figures, please understand that between 18,800 to 20,000, there was a very quick movement. And such movements that we see are primarily backed by hedge funds. Just a few stocks pulling the Nifty up, very quick movement. I had mentioned this earlier also that it is primarily the hedge fund money that was coming in. And they were the ones who sold between 20,000 till now, and they booked the profits and they left. Hedge funds are very short-term traders who come in, big money, pull the market up, book the profits, and they vanish. But they end up disturbing a lot of, the traction that gets built over a period of time. So while we are bullish, because of the kind of momentum that suddenly picked up and the correction that we are seeing, from here, we'll see a lot of whipsaws before we can actually test 21,000. The rally from here to 21,000 may not be a very smooth rally because of this. So FII selling in the last 3 days after the hedge fund money probably got pulled out. If you see the kind of fall that we saw in the last few days of selling in stocks versus that, the FII selling figures were very nominal. It wasn't that great. In fact, on Wednesday, everyone was assuming that they would have sold 4,000-5,000 crores worth of stock. It was hardly 1,300 or it was less than that. So it is clearly not that the FIIs are booking profits also. It's a very, very normal, just a shakeout. And even after this whole fall, the VIX is actually down, VIX is not up. That does not even show any major concern. So this is not a market to sell, book profit. It is rather an opportunity to buy stocks. So let's not look at the market negatively. Every fall doesn't mean there is something wrong. It gives you an opportunities to buy. So like I said about the hedge funds, they pulled the market up from 18,900 to 20,000. And this is what has happened. They have exited clearly. Sorry. So the sectors still remain the same on my watch list. All of them have retraced pretty well, barring the pharma, which has done well. FMCG banking reality has corrected. Autos also corrected. Their longer term time frame remain the same. Daily has retraced and brought all of them into a very comfortable positions for us to add. So we have added a few. We are holding on to the rest of that. We have not really exited any of them. So these sectors still are on our watch list and nothing has changed on that front. Coming to the stocks, I have only one stock to talk about today, but rest of the stocks will be taken up by Sonal. So ICICI Bank, which we shared with you guys day before yesterday, ICICI Bank had a very nice, a range. It has moved for quite some time. It moved out of that range. It has come and tested that again. It's called the change of polarity. When it tests the previous swing highs, which was earlier resistance, now becomes a support. This retest of the levels is an amazing thing to happen. The ones who have missed out on the rally, which happened over here, or the breakout, can now re-enter over here. It is as good as this that if ICICI Bank closes below the support line, it will be breakout failure and we'll have to trigger a stop loss. So from here, our stop loss is just about 20 points maximum or 25 points. But the upside is almost around 150 points to 200 points. So ICICI Bank is very well placed. And though we have little, we'll be adding on reversals from here coming week. So rest of the stocks, Sonal, can you please take up?
Yeah. Can you see my screen? Okay, so I'll quickly just run you through what I am seeing at the chart right now. So Nifty, this is Mayur has explained it very well. Though we have kind of corrected like right from 19,780 to, like straight away we saw this back-to-back big candles and a correction of or a retracement. I would not call it a correction because correction would be more than 5-6%. So this is hardly any I think 3.5 to 4% correction that we have seen here. And we were expecting it to reverse from this upper parallel line of the flag, but it kind of took the support of the lower line and now, here gave a reversal candle. But what is, what has bothered me about the Friday, let me just reset so that you can just see it more clearly, that it should have cleared this resistance line. And if it had kind of closed above this, then we are probably, we would have seen a short reversal in the coming days. But then it kind of stopped right at the resistance. So what we are anticipating, either the market will kind of consolidate from 3 to 5 days. It will follow the, the same standard Fibonacci numbers. So 3 to 5 days, we may see some consolidation. Don't get stressed. There is nothing like it's still Nifty is faring, with positive bias. But what we are gauging here, that because the closing was below this level, that is 19,543, it may take little bit of time. See how much time it took here. Probably not this long, but if it takes time, it will create a base for another, up move. So any which ways it will be, we need to be patient and we'll see how it is kind of consolidating around this area. Bank Nifty. If you see, there is I'm not saying, I'm just giving you a heads up here that this is a shoulder, the head, it may kind of make another shoulder. And if it is not able to cross that 45,651, we need to get very, very cautious. But still, we have 800 points rally here. We'll see how it is, acting around this zone. We will watch it very closely. But as of now, compared to Nifty, Bank Nifty is really showing good movement of, 700-800 points. So this was about Nifty, Bank Nifty. Now let's come to our holding. Now, Maruti, our stop loss was closing below 9,500. There is a dividend adjustment of 90 rupees. But what I want to tell you about Maruti is overall a very, very strong company. And if you see 1, 2, 3, 4, we have seen a 4 days of back-to-back fall. The maximum of, any strong stock would not go beyond 5 days of fall. So if you see here also 1, 2, 3, 4, 5, you go to any past trend of Maruti, it would not have fallen beyond 5, consecutive days. So what we are anticipating, probably on Monday, there may be, another retracement here, but post that, see, everywhere where it followed that 5 days, you are seeing a good rally building up. So this is what a Maruti looks like to us as of now. And we'll watch it closely. If we think that it is getting weaker, we'll try to trigger our stop loss. But a company like Maruti, where all the indicators are strong, we need to accumulate it further. L&T is building up very fast. After this 3 days of fall, it is now giving a very nice candle. I am anticipating a good 100, 150, upside from here in L&T. Bank of Baroda hovering in our support. And we would not call it when the Bank Nifty, as we can see that there are 800, 900 points, upside is there. Of course, Bank of Baroda would not be left behind. Its momentum, Mayur has showed you many times that how RSI is playing out in case of Bank of Baroda. So if someone is calling it weak, you are stressing yourself. This is, unless it gives a closing below 188, 187, just by, fall of 3-4 points, if you're just kind of getting nervous about it, then you shouldn't be taking this trade. So Bank of Baroda, I think that today is the result. Let's see how the result comes, and on Monday, how it, the market reacts to the result. But as of now, unless it is kind of, trading in the support, this thing, and not breaking and closing below it, we don't have to worry about it. SBI, just because, you know, the market hasn't given a clear consolidation, clear, you know, the reversal pattern. That is why we took SBI in equity. But you can see there are like slew of supports now present for SBI. So first was this 580.88 where we went long from 588. Even yesterday it broke the support, but we did not exit because there is another support now, 568 to 573. So I guess SBI is also very, you know, it's very well placed for bulls in the chart. And because we have back to back so many strong supports in case of SBI. Tata Steel, I think I have, you know, mentioned many times, this is again in its support area. And we added more, it kind of, you know, traded above this level of 121 for good 2 days and gave us the confirmation. But because of the retracement in the market, we saw a fall. We are carrying 2 lots here, one at 160, 16, another at 121 point something. So we'll be carrying it. We don't see any major problem. It's just the normal retracement what we are seeing because of the market. Ashok Leyland, we don't have to, we will be probably carrying it in future. We are carrying and probably, you know, taking it to the target of 200 or so, and we'll keep holding it. McDonald also is consolidating. There is no worry. It hasn't broken this support where our stop loss is, I think, 970 or something. So it is nicely kind of trading above it, even in the weak market. So that's fine. M&M, yeah, M&M is something. It is fundamentally, I personally like this company because of seeing it, you know, the financial ratio and all. And even yesterday, the management came out with the numbers, and that was like amazing. I think one of the best in auto sector, better than even Eicher Motors numbers. So the one news that is bothering the market is their RBL investment. I don't know why market is taking it so seriously when they are already saying that beyond 400 crore, they're not going to invest more, and they're just going to have like there they have invested because they want to see that how the banking to get a experience in banking industry. But overall, the fundamental numbers of Mahindra and Mahindra remain very strong. And another thing, yesterday I was looking at the PE and the ROE and the, you know, the company that reported the PE is this is the most undervalued company in the auto sector. The PE is just 12. And so I don't kind of find a reason not to hold this further, and it is very well in our comfort zone, and this kind of is a good support. So we'll keep holding Mahindra and Mahindra. We may, because we know that it's such a, like, if it moves, it, you know, it gives us a quick movement of 2 to 3%. So we are waiting for that, and we'll hold it patiently. I think IDFC we have discussed. Yeah, Zydus Life Sciences, it's something like what you are seeing in case of L&T. Yeah. So again, it kind of, you know, 4 days of correction, it retested the breakout zone, and we kind of went long here. So yeah, around 639 where we just bought this. And it is nicely now kind of following the, you know, HL and HH pattern. So we'll see how it kind of pans out in the coming days. Tech Mahindra is here it is again. We saw last time a symmetrical triangular breakout because of the result and all. It retraced. Now again yesterday it closed above this you know, the upper resistance of the triangle with good volume. So for us, the first target, because since it the setup is very good of Tech Mahindra, but since it's from IT industry, we are just holding it in equity. The first target would be 1223, and if this zone is breached, and not breached, it just crosses this zone 1223 to 1259, we'll see 1327 as the next target. So probably a month or two is the time frame I'm looking at to, Tech Mahindra to go to 1327. I guess the other Bharat Forge last time for the coming week, there are 4 or 5 stocks that I'll be closely watching. Again, REC, I'll tell you why. Because it kind of we went long from here, exited at this candle. It did not, I was expecting it to retrace back to this level, but it did not. And here it kind of again retested this resistance, and yesterday it is it's going back. So what I am expecting, the day it kind of crosses 203, there'll be another 20-30 points quick rally in REC, and that is what we will try to just kind of tap at. And that is why REC, again, I would like to look at this and follow it very closely for the next week. Another stock, Marico, it is building up very well in the chart. So we can see this is a strong resistance, 1, 2, 3, 4, 5 touch points. So it makes it a very, very strong resistance, a trend line with a strong resistance. The moment it crosses this, so above 590, wait, just 1 second. Let me just readjust. So basically above 585 or 590, if it sustains on 125 time frame or for a day, then we can definitely see a nice movement, to the size of this pattern in case of Marico. So this looks quite interesting to me for the coming days. Another one is Alchem Lab. Here, the same thing what we saw in case of Zydus Life Sciences, it tested its breakout neck and now reversing from here. So we'll see whether, how the market is kind of moving on Monday. Accordingly, we will like to go along in Alchem Lab in future. Another one is Lupin. So Lupin, when it gave a breakout, it gave a very shallow breakout. So I just kept waiting for it to just kind of make a good candle. Here it made, but then again, next day for the follow-up, it did not give us a very good follow-up. And then after that, it just gave a very good rally. So I'm not going to buy right now Lupin at this level, but it is very much in our radar. So whenever it comes back to this level of 999 to 1005, that is when we will just go long in Lupin, because right now even the RSI and all are look quite overbought. So I would like the indicators also to get little, to just cool down for us to go long in Lupin. So this is it. We'll be primarily focusing on banking sector. And as Mayur said, though HDFC, Axis Bank, all these private banks are reversing from its support zone, but we would be just focusing on ICICI Bank, and in coming days probably add more. So that's it from my side. Any question regarding any other